Testing, testing, 1, 2, 3. Hope the mic is working. Shout at me if it's not. Thank you to the mods in the chat for being here. Today's video is a little bit philosophical. I did a lot of thinking last night, got a lot of hard questions, and we're going to do a kind of touch on a lot of prickly subjects. And I think it's worth touching on, as well as uncovering some very important trends and looking at a whole bunch of data, because that's what we do here. We look at data. We are live. Thank you, Sean Donnelly, K8, TND Tesla, Max Grease, everybody in there. Appreciate you all. I see Phil's there too. This is called Occam's Bitcoin. It's not really Occam's Bitcoin, but it will be talking about fundamental principles of Occam's razor. A lot of stuff that I base my life on, Metcalfe's law, valuation metrics, and so much more. And we'll also touch on some prickly topics. Like I mentioned, Bitcoin, by the way, did have a nice night, up a little bit. It's just shy of 109K again after a little dippy doodle down yesterday. People were, nervous. We fell down to 107,000. That's right back at 109 for the Sunday action. But let's get into it. And of course, I'm just a guy on the internet that shares data, nothing else. So do not take any of this as financial advice. And all the questions come from Patreon. Big shout out to Patreon as well. First of all, Mr. Burns, thank you so much for this question. Many have made the suggestion that every crypto cycle ends because of a leverage bubble burst. This cycle, could the Treasury company frenzy serve as a leverage that will end the cycle? Thanks to you and the team doing all the hard work. Yeah, this is one I think about all the time. As you know, historically, my third YouTube video ever was about MicroStrategy, believe it or not. And a lot of stuff has happened right now. We do have a couple of frenzies going on. Some crazy stuff happening. We saw last week with Tom Lee and others. But let's get into some fundamentals. I'll take a bigger picture of where we are with Bitcoin and look at some wallet addresses. So I'd like to take a minute and walk around how kind of cycles are so important in life and everything in investing. So I'm going to dwell on this a little bit. And yes, the image is probably not the best, but I hope you understand. We're going to start at the top, the early visionaries. And this applies to everything. I always say, get in early, get in hard. It's so important. I didn't get into Bitcoin till the second tier adopter category, by the way. I was not. I heard about it, but I thought it was a scam and, being very conservative. But the early people are the pioneers, the cypherpunks, the cryptographers, the tech enthusiasts, etc., that got in at $10 and $100. They are called the smart early doctors, I like to refer to them as. And they saw what could be done. They understood how to mine, and they bought it for cents and held through volatility. And we had cool people as well, like Hal Finney, who received the first Bitcoin transaction from Satoshi Nakamoto. Henrik in Denmark. Tak. Mengatak. Hope that's right. Thank you very much. The second tier, 2013 to 2017. This includes early retail investors like me, tech-savvy individuals like to be early on trends, and small-scale speculators. And then we have the corporate treasury first mover, MicroStrategy. And I thought, in 2020, 2021, I thought especially in 2021, a lot of people would follow Michael Saylor, but very few did. People like Elon Musk did with Tesla and SpaceX, but no others really until later. And then you have the corporate followers, which includes exactly what Mr. Burns says, the treasuries, the corporates, the zombie companies that have nothing going on, nothing. But they say, well, we can pump our stock if we buy some Bitcoin or whatever. And that's kind of what we're going through right now. And then the pensions and the institutional investors, the ETFs, the pension funds, the sovereigns, and so much more. And then the governments, that'll come late. But that is kind of the way I look at the cycle. And in the categories for Bitcoin, it might be slightly off, but directionally, it's very correct. And again, I'm in the second tier adopter and was the very first guy to adopt the MicroStrategy playbook. And another way of thinking about this too, and again, the reason I'm spending time on this is so important in investing. And an analogy is a forest fire. I love these analogies. I was trying to think one up last night as to you know, what it would look like. Well, forest fire, spread, and I will spend time talking about network effects because a forest fire, it's a horrible thing, I know, but it also is a network effect. So you've got the original people, the spark, lighting a piece of dry grass or something in the corner of the forest. Then you have the brush fire, more grass spreads, maybe some shrubs, maybe some small trees, burning brighter, drawing attention. Then the tree line be the first corporate movers. Fire reaches all the trees, and then the forest spread, the corporate followers, more forests burn, and then the canopy blaze, which is like the pensions and the institutions and TradFi, desperate for a solution. They jump in too, and then the ecosystem shift. I don't know how to describe that, but basically the whole forest is burned down, like what happens in California quite often. But that's kind of another crude way to think about it. But really, we'll be touching on network effects in a minute, but this is all so important. And I'm painting, as usual, the questions blend into each other, and that's why they're so great. They make me think. But why, people ask, why do the bigger players move slower? Well, they're conservative. They have a bureaucracy. They're risk averse. There's an information lag. There's no trust. There's no regulation. There's no rails. There's no accounting. There's inertia. Why change stuff? Now we have a new breed of companies that are dead. I always say 40 to 60% of the S&P 500 are zombie companies that won't be around in 2030. I hear other people now saying that for the first time ever. It's brilliant. And we can probably up that 60 to 40% to higher, like 80% of companies will be toast. But these companies now that are zombies, all of a sudden they're moving fast because they watched what happened with Saylor. Now, getting back to kind of the big point, I'll turn my camera off so I'm not blocking this chart. This chart is so important. I do the cohort wallet moves every quarter now for years and years and years. And I had a huge conclusion late in 2024 that dolphins were it. Okay, the dolphin cohort. And this goes back to exactly what's going on. As I'm mentioning, these are the, let me try to make sure I get the right number. This is the 100 to 1,000 Bitcoin wallets. They're typically treasuries. They begin at treasuries and they've got different allocations for different wallets, perhaps in the same treasury. But you can see here, and go back and thank you so much, all the blue on these 100 to 1,000 treasury wallets. That is who is driving this market since 2024. Blue treasuries. If you're buying 100 Bitcoin or 1,000 Bitcoin, you are not a retail investor, okay? You might be a billionaire, you might be a sovereign or a pension, but you are not a retail investor. And pensions typically allocate to things like MicroStrategy and stuff. But this is the game we're in. So, Mr. Burns, you're right. This is the game that could trigger the problem that comes next. And as a long-winded introduction to getting to the point is this. This is the HODL model that we have. Basically, we had Marathon Mining that has a ton of IP, a ton of real estate, millions of rigs, energy contracts, you name it. They have everything. And they were trading at 0.97 to their bag of Bitcoin last week. Now they're back up to 116 because the miners have all popped. So there's a 16% premium. But this is a sign of what could happen in the future. And that is the treasuries, Marathon's a miner. They mine 700 Bitcoin a month or a quarter. No, a month. Sorry, a month. And they do it quite profitably. But they were even at a huge discount. So what's going to happen to the rest of them, particularly the zombie companies that don't have a business? They are lacking sustainable business models, revenue. Maybe they have debt. And if there is a market correction in Bitcoin, like a steep one, 30 to 40%, this will make everybody nervous and skittish. They will sell their treasury companies, and NAV premiums will go probably to zero and then negative. Again, we've seen negative already. We saw it with Marathon. We saw it with a couple of others. I think GNS or one of those was negative as well. And that could cause these zombie companies to do forced selling, etc., etc., and that could lean towards significant risk. So therefore, you are right. I do see this happening. Is it leverage? You could argue it's leverage. The companies are borrowing money to buy Bitcoin. But the problem right now is all these treasuries, Mr. Burns, they're coming in late. Pomp just started one. He started buying at 106,000. You do this when Bitcoin's 30,000, 15,000, 40,000, not so close to the top so late in the cycle. But there is a theory as well that this cycle could go on forever if we get more strategic Bitcoin reserves. If the US government buys Bitcoin, which I'll talk about in a minute, then it's all bets are off. We go to the moon, everybody. So that's kind of the skinny. Yes, you are dead right, Mr. Burns. Liquidity, leverage, whatever you want to talk about, cascading liquidations could trigger the downturn next. How deep it'll be, I don't think it'll be that bad because there's a constant bid coming in, and there are some companies that still have it at a good profit. But if Bitcoin falls below 70K, that could cause the world of hurt. So thank you for the question. Next question, and this is again related to Bitcoin. Hi James, is this a good time to swap Bitcoin for Sol? A lot of people are finding ways to rotate and trade, and it's a very powerful method. We'll talk more about that too in a minute. A lot to cover in this video. From a TA perspective, this is Solana going back 4 or 5 years over Bitcoin. Okay, I'll move myself to the bottom right corner. The chart is screaming. Yes, there are times when Solana smokes Bitcoin, but it typically happens very fast. Look at the red shadow on this chart. That's the bear market. Look what happens before the bear market kicks in. You get the euphoric phase. Right now, the pair Sol over Bitcoin is just above level 1. The trend is looking very strong. There's a buy signal. That buy signal is right 85, 86% of the time. This is a good chart. Are we going higher? Yes. Are we going to level 4? Yes. Could we go higher than that? Yes, if we get a euphoric phase. But let's look at some other data regarding this too. Not just the TA. This is the pair of the TA. And you can see where that support is around that level 1. Could it go lower? Yeah. Is it going to? No, not with the ETFs. But let's look at the Pumpamentals. Shout out to Ivan on Tech. I love that word from him. Now, I know Bitcoin's a store of value and Solana is a global machine that runs all of crypto. Two very different animals. But if you look at the sheer difference between what one blockchain does and what the other one does, it's crazy. If this was a traditional business, I don't know, like a social network or a retail store or whatever, a technology firm, like an AI company, the valuation of Solana would be infinitely higher. Okay, that's just a fact of life. Solana makes a lot more money, has 800% more users, does 30,000% more transactions, is 10 million% faster. Okay, it is, chalk and cheese. You can't even compare these two things. Will fundamentals kick in one day? The answer is probably yes. Now, the other thing, which is a tailwind for Solana, why I believe it could outperform Bitcoin over the next 2 quarters, is altcoins do very well in the latter half of the year. We're coming into that time, and we have 9 new ETFs coming. VanEck, 21 shares, Bitwise, Canary, Grayscale, Franklin Templeton, Fidelity, CoinShares. These are all huge players that tell their customers to allocate. Remember, Solana is a very small asset compared to Ethereum, and Ethereum had the Grayscale hangover. This one doesn't, which is good. Now, I believe from that perspective, yes, for the next 2 months, 2 quarters, till the end of the year, there's a very good chance that Solana will outperform. And I will say that now in a non-financial advice way. Hope that helps. Always restless. Hey, James, could the team panel provide thoughts on potential impacts of the tariff pause and trade agreements in the month of July? Can we expect some bottom fishing? This is interesting because this will help us position for the markets. There's lots of crazy stuff happening in the markets, but the markets are at all-time highs. Nobody saw this coming except for people that watch this channel. But US stocks are up. A lot of optimism over a trade deal coming. We already have the US has done trade deals with the UK and Vietnam, and China is not fully penned yet, but it's pretty close. Global stocks are down, showing a broader concern or more confidence in the US stocks. So the money's flowing into US stocks. And the US dollar has weakened, which means the market's very skittish and cautious. So what happens next remains to be seen, but there's a couple of little pieces of news. First of all, the tariffs are generating a ton of money, 300 billion, weaving it back to Bitcoin like I like to do. The US government could buy 3 million Bitcoin with this tariff money that just came in over the last couple of months or whatever. Huge. Okay, 300 billion buys a lot. So they should do that. And they have hinted at using tariff revenue to buy Bitcoin. I hope they do. That would be fantastic. But the tariffs are postponed again. So they're not going to be settled on July 9th. They're moving it now to August 1st. Again, that's about the third or fourth delay for tariffs. And this is a bullish sign, which means the markets can rest for the next 3 weeks. And that will bring the markets higher. So don't expect a bottom dip. If anything, this is pretty bullish news for tariffs. Now, let's get into this next question from Friendly Man. It's been a while since we've seen you. Last post was 7 months ago. Thank you as well to the team that manages Discords that captures all this cool data. But Ran from Crypto Banter recently shared your compendium comparing Solana to Ethereum. He's argued that Solana should be compared not to Ethereum itself, but to Ethereum layer 2s like Arbitrum when it comes to speed, throughput, and scalability. Ran also echoed Raoul Pal's view that Wall Street is more likely to adopt Ethereum over Solana. According to him, institutions prefer layer 2 solutions they can influence or control, like Coinbase with Base and now Robinhood with Arbitrum. Robinhood actually uses Solana and Arbitrum. They're kind of hedging their bets rather than a fully decentralized layer 1 like Solana. And this raised an important question. What are the long-term implications for Solana? Could its monolithic architecture, which offers speed and simplicity, become a strategic disadvantage? Curious to hear your thoughts. This is super interesting. And this question goes super deep into a lot of the core concepts that I, as an investor, use in my life. So let's break it down. And much respect to these people, and what they're saying is correct. But at the same time, let's talk Turkey. Circle mints $5.5 billion on Solana in Q2. Circle is Wall Street. Circle is TradFi. Why are they minting on Solana? Because it's quick, easy, cheap, fast, inexpensive, scalable. And that's a great way to play it. Why are they not using Ethereum? I don't know. I'll let you figure that out. Also, Japan's native digital bank creates stablecoins on Solana. Remember, stablecoins are the biggest use case right now on the planet for crypto. And now we have Japan's first digital native bank with Fireblocks and Solana to build stablecoin issuance on Solana. So again, traditional institutions, conservative countries like Japan are leveraging Solana as well. Not just Europe as well, also Brazil and everybody, and America, like with Circle. So again, the whole thought that, TradFi will only use Ethereum, not really anymore. Anyway, much respect to Raoul Pal. I know where he's coming from because Wall Street do like control. So some of them do like the little layer 2s. Now, let's talk about data. This is startling. And this is a great chart from Solana Daily. I shared it in a video yesterday or the day before. But it's the top 10 chains by total transactions in June 2025. Solana does 72 times what ETH does. And all the time, I've compared ETH and all the layer 2s to Solana for years now. And I've also compared it to layer 2s and face-offs, etc. But even if you add Arbitrum and Ethereum, it doesn't even make a dent. Even Base is less than 10% of the transactions. And Base is, what's that, 6-7 times the transactions of Ethereum. So again, nuts how far this thing has run away. And remember, this is the crazy thing here. Stay does more transactions than Sui. Since that's the case, Ethereum isn't even in the top chains by total transactions. Ethereum has dropped out of the top 10, ladies and gentlemen. Okay? And I'm going to get to the reasons why for this in a second. And we look at daily active users. Solana, 4.7 million. It's around 5 million all the time. This is depending on the day you measure. The layer 2s in Ethereum don't even get to half of the users of Solana. The transactions, even adding all the layer 2s, don't even get to 10% of Solana. And the Dex volumes running off into the distance. Okay, same thing. Massive difference between Ethereum and the layer 2s compared to Solana. Okay, the black hole is swallowing everything. But there's more. Why does Ethereum fail, in my opinion? And this was my thing, and I'll say something else. Like, Ethereum for me in 2024 was kind of like Cardano was in 2020, 2021. It looked like the old technology that was never going to make it. And here we are. I do believe Ethereum has a ton of complexity, all right? Really is very cumbersome. Yes, it was great when it first came out, whatever, 2017 with smart contracts and stuff. But things have changed now. The slow transaction speed are the kiss of death, even with the layer 2s, scalability bottlenecks, high fees, centralization concerns, and then layer 2 centralization limits too. Yes, you might be a TradFi company that wants to control your consensus layer with one node. Yeah. Control your sequencers or operators, as Marty always refers to. Make them suitable for niche cases like, I don't know, gaming or some tokenization of whatever. That's up to you. The problem is when it comes to overall adoption around the planet, like I've showcased earlier, it doesn't stand a chance. It hasn't. And this is the reason why, okay? This is, again, Occam's razor. Another principle that I use when I look at technology. No more things should be presumed to exist than are absolutely necessary. Einstein had something similar to say too. The fewer the assumptions an explanation of a phenomenon depends on, the better the explanation. Okay? Breaking that monk speak down to my layman English is Solana's simpler high-performance design is preferred over Ethereum's slow, complicated modular architecture, where efficiency always wins in technology. That's it. Simpler solutions tend to prevail. Okay? Not complex, slow, expensive ones. Ever. Ever. I hope that's clear. But there's more. All right? All the data I just shared. This is the key. Okay? Metcalfe's law. The value of a network, whether it's Facebook or a telephone company or whatever it is, it doesn't matter. It's all a function of how much adoption it is, how many users, how many connections obviously each user has, what dApps they use, how many transactions they do. That's what wins, everybody. Solana is already doing 70% of everything that happens on crypto, all blockchains combined. One chain does it all. That's it. And it's only going to get more and more powerful. It has the leading number of new developers. It has the most breadth of dApps. It has the best dApps, etc. The most speed, the most finality, the most scale. That's why it wins. Now, we know, very important final thing. Whoops. Where is, I am missing a chart. Whoops. Anyway, I don't know what happened to slide 30. I do have, I must have added the chart later after I downloaded the deck. But the point is, Solana trades at 25% the market cap of Ethereum, but it does infinitely more. The market is not logical. I'll share this chart on Patreon later. Cardano does nothing and has 10% of the market cap of Ethereum. Solana does everything in crypto and has 25% the market cap of Ethereum. Crypto people don't even know how to value crypto, all right? That's what we do here. But again, even though we share all this data, people don't know how to interpret it and they don't place a value on it. So in time, the cream will float to the top, but that's going to take time. So we'll see what happens. Anyway, I hope that answers that question. The simple solution is, yeah, Ethereum might be preferred by one or two Wall Street players, but it's too slow, too complex. It's a pain in the butt to use. It's like doing a colonoscopy. It's no fun. I tried it recently for giggles, and it was just as painful as it was in 2021. That's just the nature of the business. Let's go. George D, 69. I have a question regarding the rotation model. I would just like to say how blown away I am and also found it easy to use. And I'm no brain surgeon. I'm a tree surgeon. I love tree surgeons. You guys are incredible. I love the work you do. I have Tsla, MicroStrategy HIMS, dfdv, NVIDIA, 3,925% ROI, return on investment. As you go into the bear market, how do we work with the model? Can we add cash as an asset? The answer is yes, and let the model rotate into cash. Or do we switch the thing off, appreciate the model is looking for buy opportunities for selected assets, but I'm not sure how it navigates a bear market. Love you all, you guys rock. Well, first of all, there are bear markets, but there's always a bull market to be found somewhere. There's always a section that's hot. It could be commodities, it could be AI, it could be crypto, it could be treasuries. There's always alpha to be had out there. So a couple of things that I do want to stress, and I've been stressing this for years, and I've been planning my rotation for years as well. Rotation is everything. So you're on the right page as a tree surgeon. But I have did a video a few months back on how to position yourself for 2030, where I completely recreated what I call the Mag 7. I call it the new Mag 9. Check out that video. And there's names in there that are confrontational, provocative, etc. But Tesla's in there, NVIDIA's in there, Microsoft is in there, Meta, Palantir, MicroStrategy, ASML, or TSMC. It's up to you. Anduril is a private company as well. And you can also think about other names: AMD, Amazon, Alphabet, Hood, HIMS. You got HIMS. These can be fun to play with too. But if there is a downturn, be very careful how you position yourself. And we always talk about Sortino rankings. So Dr. Sanjay, our head of research, who is a rock star, shout out to Sanjay. Who's Sanjay? Well, that's the guy who does this type of stuff. So basically, he ranked the 1 year Sortino and 2 year Sortino. Always think in terms of 2 years, what the top performers will be. And a lot of times, the Sortino ratios have a hard time calculating exactly where the company is going to go, especially in exponential times and the advent of AI. So things could be different, but you'll see the names here: NVIDIA, Tesla, SMCI, Palantir, ASML, Broadcom, TSMC, UiPath. Not a big fan of UiPath, but it came up here. Air Test Systems. Haven't looked into that one yet. Perion Network, Ambarella, Rocket Lab. The point is, there's lots of opportunity. You need to pick where we're going to go, and also have ones that are not correlated. Very important. And we will be doing more of this. In fact, I am working on a 2030 portfolio, which will include some of the names you've just seen, and a weighted, because another question I got was, how do we weight our AI portfolios? How much of what do we get? Hey, Luke, thanks for joining. So important. And it's tricky. But as you've seen on this channel, we're very, very good at finding winners and hopefully finding them early. And then when they run out of steam, rotating out of them and finding a new winner to replace it with. So that's the other way you need to think. Think of an old tree. I'll just think of a tree surgeon. Imagine there's a huge 100-foot oak tree outside the window here, and it has some old branches and new branches. The old ones have a little bit of that, maybe the black cancer, moldy fungus stuff, and the new ones are fresh and strong. So what limbs do you take off? The answer is you take off the old limbs and you leave the new limbs. So think of the old limbs as the stocks that are running out of steam, and replace them with the new ones, which you could be a part of the AI revolution. Again, another very crude analogy. I'm trying my best here. Live TV, but I hope that makes sense, okay? So think of you being a tree surgeon, what to chop off and what to leave or replace or rotate into. Next question is from BR Gringo. Thanks for all you do. This might be a trivial question. It may not matter, but back in the last bear markets were crashing, I had a hard time moving my crypto around to exchanges to swap into stable coins. Some of my assets are in hot wallets like TrustWallet and Phantom in preparation for taking profits. Is it best to place, e.g. Bitcoin, in a centralized exchange like Robinhood to swap out to USDC? Or should we just do that in a hot wallet? Would I get a better slippage either way? I find that the market sell price on the SEX are much lower than DeFi, i.e. if the decision is to sell. If choosing not to sell, would you wait for CEP to accept Bitcoin for yield directly without tax implications? A lot to unpack there. I'll tackle the last question first. CEP, I don't know if that's ever going to be available for the average retail investor. It might just be for people with large Bitcoin bags, like 5,000 Bitcoin or more. I'm not sure how that's going to pan out. So don't bank on CEP being able to go tax-free. And because CEP will be a treasury, that could also be hairy in a bear market too. So cash might be a safer option, especially if CEP is trading at a NAV premium, like we discussed at the morning. And remember, see the way everything dovetails in together. You can't make this up. But Coinbase fees are literally daylight robbery from Tom here. Coinbase is daylight robbery. You have to trade 250 million, resulting in 300,000 net fees to be a VIP. When you look at the fees out there, they are nuts. So I have used all of the different fees. Again, you get murdered on Coinbase with the 0.6% taker fee or whatever. If you are swapping something like Solana to USDC on Orca, it's free or $1 or something. Jupiter charges no fees for swaps, but the fees on decentralized exchanges and AMMs like etc. are very, very low. We're talking 0.1% versus what could be 1% on a centralized exchange. So if you are moving large amounts of money, it definitely makes sense to think about a decentralized exchange. But I will talk about one thing that's so important. First of all, hot wallets and dexes, they're fast, cheap, decentralized, no centralized exchange risk, no turning you off, no going out of business, no not being available at a critical time. Like if the market's crashing or pumping, sometimes certain things don't work, like Coinbase. A centralized exchange, however, is sometimes easier for some. You got fiat access on ramps, could be connected to your bank unless your bank blocks them. It can be slower, there's less control, and you get worse prices during volatility. And there's also, some people don't like the monitoring out there. They do share your data. Other reason to ding it. But if you are doing hot wallets, and this applies to everybody, I do want to stress one thing here, going a little bit away from the question. Always, always, always have a dedicated machine for your hot wallet. Do not let anybody near that machine. No kids, no partners, no spouses, no friends, no roommates. Nobody touches that machine. Okay. That is only for managing your hot wallet and access to DEXs. That's it. Dedicated device. Install only essential apps. Use a solid OS like Mac OS. I don't trust Windows and all that crap. And create a dedicated email for your crypto hot wallet like Proton Mail. Okay. And never, ever, 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 ever share your seed phrase. Never. Whoever calls you, whoever asks you for it, even if it sounds like your mom, don't give it to her. Don't give it to anybody. Okay. And never store them digitally. Store them physically far away from where you are. All right. Hope that helped. So yeah, things have changed. You know, I would have said 4 years ago, hot wallets, dangerous, don't have a lot of money on them. But if you spread it around and you manage your risk, it's just as safe as probably a centralized exchange. Next question from Hobbit44. Okay, James, in case you're entertained, some on the chats have noted that you have some characteristics of a vampire. Ha. The whole mystique, not just never sleeping. I do sleep a little bit, but not very much. Made me look up a VAMP to see if it's a stock. Sure enough, NSE in India and BSE in Bombay, VoltAmp Transformers. Here's the best part. It's skyrocketed in the past 36 months. Low debt, 650% gain in 24 months. Mean reversion back to 400% gain. Obeying the fib levels very precisely. That's what happens. This one is volatile. Looks like an energy play in India, which I think is bullish. And do you ever dabble in the international exchanges? Take a look at the chart. So I did have a look into this. Thank you, Hobbit. And Hobbit meets vampire. Yes, we are kindred, my friend. But let's jump into this one. First of all, this is so important. VoltAmp helps the transformer bottleneck. Okay, I won't get into the nitty gritty of what they do. I looked at their website and everything else. But they do these 14,000 MVA and this planned 6,000 MVA facility to help, you know, grids have industrial power for industrial applications like data centers. And they produce transformers up to 160 MVA, 220,000 volts, suitable for medium to high voltage applications. But the most important thing, and why this is so profound, is Elon Musk said transformers are the new AI constraint. A few years ago, AI scaling will move from chips to voltage transformers to electricity generation. We're in that voltage transformer hole right now. And also one of the big fights going on now between Elon, he hates to see China running off into the distance with solar. Solar is free energy from the sky. US is not embracing it. That's bad. Okay. Energy is everything. The more energy a nation has, the more GDP per capita it has, the more wealth it has. With that energy, we're all toast. That's a big problem. Anyway, don't listen to the guy that can foresee things 8 years, 10 years in the future, but he's doing it anyway. He is stockpiling transformers. Shout out to Joe Tegmeyer. You can see all the transformers here in tons of different locations at Giga Texas, because they need them not only for the data centers that they are building. Tesla and Musk Industries have the 2 largest supercomputers on the planet, but they also need them for AI and data centers for their clients that are buying megapacks. They can't sell the megapack if they don't have the transformers. So this company, VoltAmp, is unbelievably well situated right now, and you can see it in the financials. Their revenue is growing like a weed. They are profitable. Their EBITDA is even more profitable, and they got no debt and tons of cash. So this is absolutely perfect right now. And the chart is a killer as well. This is VoltAmp on the ATR. I do not own this stock. I have never bought a stock on the Indian Stock Exchange, but I can tell you, based on this chart, there's 60% upside. You can take a screenshot of this and come back in a year. This stock will be higher. So shout out to our friends in India. If they have access to this, it's worth a little dabble. Trend is strong. Buy signal is there. And this model works 94% of the time on this particular stock. So enjoy the ride. Full time. Very important. Joe Crow. Hi, James. With your goal of increasing Tesla to 50. Oh, by the way, I just want to say, Hobbit, thank you for this. I always get people asking me to look at stocks, and normally they're garbage. This one is a winner. It's rare I say that. So, Joe Crow, with your goal of increasing Tesla to 50% of your portfolio, what would your ideal portfolio percentages across your 5 main assets today look like? Tesla, MicroStrategy, Bitcoin, Sol, and NVIDIA. Good question. First of all, tap dancing shoes. I allocate based on relative value. So if something falls out of bed, like NVIDIA falls down to $88, I quintuple the size of my bag because it falls so much. So the allocations really are a function of how much they fall, how much I buy, and how much they rebound. And that skews everything very fast. So imagine me having lots of crab pots like you see in the ocean. I let the crabs fall into my pots. Okay. I have my limits set, my layers set. And once they do fall out of bed and the fundamentals are still good, I hold them. Now, AI is the clear narrative for the future. Next 5 years will be bonkers. Everything's going to change. Crypto also, but I don't know for how long this bull market is going to continue. And I'm working on that 2030 bag allocation for Patreon. So stay tuned. There's a lot of work goes into it. I'm looking at like 80 different stocks and different allocations. So, and I do want to say something. We had a very bumpy weekend. It was a very stressful Saturday for me yesterday, and Tesla Boom Mama nails it. There's Elon Musk wants to find a way to stop the debt from growing in the government and to stop bills being passed that are full of complete nonsense. Okay, as a first principles thinker like Elon Musk, it drives him crazy. We are going to $40 trillion in debt. The US country if it was a company, it'd be bankrupt, okay? And his goal is to reach Mars. And his goal is to save lives with autonomy. And his goal is to make the world renewable, etc., build robots, grow GDP, all that type of stuff. But he cannot do that unless he has a government that is going to make the right decisions, not a bunch of grifters from 2 different parties. So what he's trying to do, again, is insert a way where he can bring some balance, even if it means just having 6 seats in Congress, because the 2 parties are 50-50, neck and neck. Vice president needs to be the deal maker by splitting the vote. But if Elon Musk can just get 6 or 8 seats, then they can prevent nonsense from being passed and ensure good things actually happen in government instead of government wasting money. So that is basically a quick perspective on that thing. We don't know what's going to happen with Tesla, and the market opens tomorrow, but we'll see. Sometimes things bring about a lot of initial fear, and then they rebound. We'll see what happens tomorrow. Anyway, this week as well, we have Cosmos, who is kept as a pet and cannot be released into the wild. Is mild metabolic bone disease. So we're helping our little opossum. And yeah, they look scary and everything else, but they're very cute. So thank you so much. DCA tomorrow morning, as usual, with the team. We look forward to that. I think Marty's going to be in Australia for that one, so it'll be late his time. And thank you all for coming. I'm going to do some live questions right now with everybody here. And a big thank you as well to the team. Let me wait and get the questions. I may have to pull them from my cell phone because, you know, the Mac OS used to work really well, but now there's a huge delay. There they are. Anyway, Doc Intern, Coinbase now offers loans against your Bitcoin. Your thoughts on taking a loan against Bitcoin, max 40% LTV to buy leaps on Tesla MicroStrategy. Thanks. Doc Intern, you're a very good friend, and thank you for always being here. I would not be buying MicroStrategy here at this level. I hold it. I hold a lot of it, but buying it at this stage of the bull, no. Tesla, it all depends on what happens over the next week or so. Normally these things fizzle out and people move on. I'm hoping that's the case. And I wouldn't go 40% loan to value. I'd go much lower. Okay, so imagine Bitcoin's at 100 grand. Well, maybe your liquidation level will be 40K. It's not going to happen. So yeah, you could be safe there, but if you need to do it, if you don't have cash and you want to get some exposure, and if you see really good deals, like heaven forbid, a low $200 Tesla price, which was where it was a couple of weeks ago, so it shouldn't come as any surprises back there again. Or a $76,000 Bitcoin, that's attractive then to buy MicroStrategy. Always watch the NAV premium, but it's always dangerous to borrow to speculate unless you're buying something real close. If you see me buying leaps next week on something, then you know there's a good deal to be had. But always make sure you can always cover the interest. Make sure you only do it for a very small part of your bag, like 10% of your Bitcoin, and make sure you can bail it out in the event that things go bad. So let me see. LAX guy, how many MicroStrategy to equal 1 Bitcoin? Let me pull up the MicroStrategy ARB calculator. I'll tell you exactly how many shares you need to buy 1 Bitcoin. 467.655 shares. Boom. So that's a lot. Yeah, 467 is now 1 whole coin. And make sure that model is right. Yep. And I'll share this model again later on Patreon too, so you all have it. But that was an easy question. Sean Munir, my Proton Mail just got hacked the other day. Stay safe. Oh my goodness. I had no idea. I always heard Proton Mail was the safest of all mails. That's stunning. I'd like to dig into how that actually happened. Again, we'll see. SZS, this channel should have well over 1 million followers. So like and make sure no people will watch channel with crooks. Appreciate you. A lot of the people that subscribe to the channel are kind of scammers, and they pump stuff, and they have all these fake things like, oh, do you have Miss Lindsay's email because she just made me $360,000 last week? All these things. We pay for our team to block all those people, so you will never see a scammer in the comments, and if you do, they're gone within an hour or so when they get clicked out. So all of those subscribers are eliminated, and you know, that type of stuff. So that's probably why we're so low, and we don't care. Small intimate groups are always the best. Thank you so much, and thank you for super sticker Max Grease, Henrik Carmel, Tchaikovsky 7, Engel Blackson, Synthetic Dividend. I love that name. Signal 103. 420 Kyle 1620, and opossums eat ticks, and they're great. Oh wow, I gotta get some opossums. That's so that's great news. we had to pull a tick off a dog recently. Adam Q as well. Thank you as well. And thank you to Sean D, TND Tesla, K8, and everybody being here. Happy Sunday. See you all tomorrow morning. Have a good night.